First quarter GDP data paints a confusing picture. Economy grows by 7%, which is higher than last year, but the gross value added at 7.1% is lower than a year ago.
HDFC Bank makes loans cheaper, cuts base rate by 35 basis points to 9.35%, the lowest in the industry. Other banks expected to follow suit.
We'll look at the data as it comes in and take a further view. So we've not said we're finished. We said we're looking at the data and we'll take a view as the data allows us.
We are not done cutting rates, says RBI Governor Raghuram Rajan, reiterates that the RBI stance remains accommodative, but also adds that inflation remains a concern.
Markets slide in the last hour to end with marginal losses. The Nifty tumbles below 8,000 after Ambit, Barclays and Macquarie turned cautious and slashed their Nifty forecast.
If you read the 2013 land law, probably the worst drafted legislation in Indian legislative history.
Even as the finance minister calls it the worst piece of legislation, come midnight tonight, India will revert back to the 2013 land acquisition law as the ordinance is set to lapse. Jaitley maintains that the government's appetite for reforms is still intact.
Finance Ministry officials make their case for a ratings upgrade to S&P. Executives promise healthy growth in corporate and indirect taxes. S&P raises concerns over external debt and falling exports.
Oil marketing companies cut fuel prices. Petrol prices cut by 2 rupees a litre and diesel by 50 paise. Oil prices fall sharply after rallying for the last 2 sessions.
Stocks in China pair losses but still end in the red. Markets in US and Europe also extend losses amidst uncertainty over the Fed rate hike timeline.
The Law Commission bats for the abolition of death penalty except for terrorism-related cases. However, 3 members of the panel submit dissent notes.
Airtel, Indigo, BMW and even IRCTC make it to the list of top 50 brands recognized by Paul Reiter. A special report coming up.
मेरे प्यारे किसान भाइयों बहनों, 31 अगस्त को ऑर्डिनेंस तो समाप्त हो रहा है, लेकिन जिससे किसानों को सीधा लाभ मिलने वाला है, उन 13 बिंदुओं को नियमों के तहत ला करके लागू कर रहे हैं.
If you read the 2013 land law, probably the worst drafted legislation in Indian legislative history.
देश से प्रधानमंत्री ने, इनके मंत्रियों ने, चाहे वो गडकरी हो या और हो, जिन्होंने भी बयान दिए, इन्होंने झूठ बोला और गुमराह किया.
हम रचनात्मक सहयोग दे रहे हैं. जो 35 दिनों का सबक मोदी जी को सीखना चाहिए, जेटली जी को सीखना चाहिए, नरसिम्हा राव और मनमोहन सिंह जी से, ये है कि पॉलिटिकल एंगेजमेंट के बिना, पॉलिटिकल राजनीतिक संपर्क के बिना, राजनीतिक संवाद के बिना, राजनीतिक विचार विमर्श के बिना आप हमारे लोकतंत्र में आगे नहीं चल सकते.
It's the Congress which has done the U-turn after the chief ministers who attended the Niti Aayog and after 1 full year of 2013 Act, having not enabled them to acquire 1 inch of land, they wanted amendments to be brought in.
Well, the finance minister has called it the worst piece of legislation in India ever, but India will revert back to the old land acquisition law of 2013 brought in by the UPA government, fully supported by the BJP starting midnight tonight. The government has beaten the retreat after opposition's uproar. Is it a blow for reforms? No, says the finance minister. That exclusive interview is coming up for you in just a bit on the show. Good evening. Thanks very much for joining us on India Business Hour. Surbhi joins us from Mumbai. Hi, Surbhi.
Hi, Shireen. Well, a very data-heavy day. We've got a lot of ground to cover, from the GDP numbers to the fiscal deficit to core sector data.
Absolutely. So let's get right down to it. Let's start with the GDP number. India is growing on par with China at 7%. But the data does throw up a confusing picture. Growth is below expectation but higher than last year. But the gross value added has slowed down. What is gross value added and why is it important? Lata standing by to explain that to us. Lata, the headline number is not great. But if you look at the internals, are they indicating green shoots?
Oh, absolutely. The numbers are lower largely because of a lower agriculture, which we knew there were unseasonal rains in February and early March, and it is the Rabi output that falls into the April, May, June agricultural tally. That's coming at 1.9% compared to 2.6%. Also bad is the electricity number, coming in at 3%, whereas a year ago it was growing at double digits, 10% for most of the quarters in calendar 2015. Clearly discoms are not able to buy, and therefore electricity is being generated at way below capacity levels. That's a negative. And the final negative comes from public administration, public health, education, services. That was a very low base last year because we hardly had any much by way of a government. There was no government in April and May. Took office only in June. It was only 2.8% year ago, but it's a miserable 2.7% this quarter as well. Probably it gets revised, but this is certainly a poor performance. The rest of them have grown very well. That's the green shoots. Manufacturing 7.2%, construction 6.9 over 6.5 last year. But the best was trade, hotels, transport and communication, growing at 12.8%. It is 25% of the total GDP contribution, and it grows 12.8% over and above a 12.1% last year same time. So that clearly is the green shoots that we should cling on to. Just a word more, normally GVA, gross value added, at 7.1, plus taxes would be GDP. You would expect GDP to come in a little higher, but actually I've got a lower GDP at 7%. That's a bit of a confusion which Professor T.C. Ananth, the chief statistician, tried to explain. So let's just listen to what he said.
The difference between the two, as you quite correctly note, is the net indirect taxes less subsidies. Now, the method in which they are calculated needs to be understood. In current prices, the indirect taxes and subsidies are calculated from the government accounts data. So there's no confusion there. The numbers are exactly what the accounts show. In constant prices, in the new series, the manner in which net indirect taxes and subsidies are calculated is as per the recommendation of the SNA and IMF manual. Essentially the tax collection is grown by a physical indicator reflecting the value of output. Now, so what happens is we grow over the first quarter of last year with various physical indicators available on indirect taxes, and that is what generates the growth in, if you like, in net indirect taxes and subsidies.
Well, that's the chief statistician there. Lata, coming back to you now, and we were just going over this confusion and the difference between the total gross value added and the gross domestic product, but GVA is more important, isn't it?
Yeah, it is the gross value added that is important, which while it is lower than the amount of value add last year, is clearly indicating some pockets which are doing well. There's just one more number we should remember. The nominal GDP, which is without taking away the impact of prices, that has grown at 8.8%. On the budget anticipates the nominal GDP to grow at 11.3%. And the fiscal deficit is 3.9% of that number. Now, if the nominal GDP is only growing at 8.8%, we may default on the fiscal deficit, or the government may have to cut more expenditure. That's another negative. And again, this taxes conundrum has to be explained, or has to be better accounted for, because in a year from now, if you have GST, which is like, say, 20%, and then you have this confusion, then people will not believe any of our GDP numbers. So on 2 or 3 accounts, the government needs to get its statistical house in order.
I think most of the numbers are in line with the expectations which we had, but I think the difference lies in ultimately boils down to the taxes net of subsidies. I think that has played a spoiler, because if the GVA numbers are over there, which we are quoting at 7.1%, that are also very close to our estimates, but the GDP number at 7% lower than GVA means actually there has been some sort of subtraction from the GVA number. So that, I think, is a matter of surprise to us, because we were expecting a big number from that side, because the indirect taxes have grown at 38%, subsidies have actually declined by 2.5%. So there was no reason to believe that why the GDP number should come lower at GVA number. Possibly the impact of that tax collection may not have been factored into the Q1 GDP numbers.
The big surprises are clearly on the agriculture side, Lata, because a lot of us were expecting a contraction in this sector, particularly the unseasonal rains as well as the delayed monsoon. All put together, we were looking at agriculture in a contraction zone, but very clearly 1.9% is a surprise on the upside. We were anticipating GVA at a much lower number, which was at about 6%.
So the data conundrum continues, and staying with numbers, growth in the 8 core sector industries slowed down to 1.1% in July versus 3% in the prior month. Coal production showed a growth of just 0.3%. That compares with 6.3% growth in June. Crude oil, natural gas and steel production declined by 0.4%, 4.4% and 2.6% each. On the other hand, petroleum refinery production showed an increase of 2.9%, while that of fertilizer and cement increased by 8.6% and 1.3% in July respectively. The 8 core sectors contribute 38% to the overall industrial production figures. And it's data-heavy day. As we've been telling you, the government has clearly loosened its purse strings. The latest fiscal deficit data for the first 4 months of the present fiscal has come in at almost 70% of the total number set for the full financial year. This on the back of the more than 30% jump in both the government's planned and non-planned expenditure. The total net tax receipts have also grown by more than 15% to come in at just over 1.5 lakh crore rupees for the first 4 months of the fiscal. And Finance Minister Arun Jaitley believes that the need of the hour is for the government to spend more. Speaking to Shireen earlier on Saturday, he clearly highlighted that the fiscal condition allows the government to bring down fiscal deficit target to about 3.6% for the current fiscal. But he would rather look at sprucing up investments than earning some brownie points by tightening the purse strings.
In terms of fiscal prudence or fiscal discipline, there is any adversity. We ended last year at almost 4%.
Yeah.
And bringing down 4 to 3.9 is extremely easy. I can go down further, but I am not in a race for just getting a few extra marks because it became 3.6.
Sure.
This is a stage where you need the economy to grow. You need activity to grow. You need public investment to grow. When you have a stressed private sector because of various other global and domestic factors, they've overstretched themselves. The government has to lead.
So the fiscal deficit is under control and could even better that target of 3.9% if the government wanted to, but at this point in time want to spend more. But on to news that is going to bring cheer to consumers. The country's second largest private sector bank, HDFC Bank, has cut its base rate by 35 basis points, making it the first lender to bring down the key rate below the 9.5% mark. Ritu joins us now with the details. Ritu, what's going to be the new base rate? And it is likely that other peers will follow suit, isn't it?
Absolutely, Shireen. In fact, one of them has already responded after HDFC Bank cut its base rate. We saw Canara Bank also responding to that rate cut, which I'll get to in a bit. So HDFC Bank has cut its base rates by about 35 basis points. That effectively now stands at 9.35%. Now, this 9.35% base rate figure is a good 35 basis points lower than both its closest rivals, State Bank of India and ICICI Bank, for both of which the base rate stands at 9.7% currently. And this also effectively brings HDFC Bank to the lowest base in the industry. Of course, this is not the first rate cut by HDFC Bank. It has cut rates by 30 basis points in the past, and therefore for this fiscal alone, HDFC Bank has cut its base rates by 65 basis points. Remember, while the Reserve Bank of India has lowered its rates by 75 basis points, most of the banks have responded or transmitted the rates by only about 30 to 40 basis points. But HDFC Bank is an exception in this case. There has been tremendous pressure from the Reserve Bank of India as well as the government for these banks to transmit the rate cuts more efficiently and quickly. And this is the first bank to respond to that call. We also expect other banks, as you mentioned, to follow suit. So Canara Bank has cut its deposit rates. In fact, it's cut its base rates by 10 basis points to 9.9%. And other banks, including Axis Bank and State Bank of India, have also cut their deposit rates by about 20 to 30 basis points respectively, which is largely seen as a precursor to a lending rate cut. So we can expect more of these banks to follow suit. Competition definitely is intensifying, and that is good news for customers.
All right, Ritu, appreciate you joining us. HDFC Bank, they're cutting the base rate. RBI has not shut the doors on rate cuts either, and that's the word coming in from Governor Rajan. He spoke with CNBC's Steve Leesman at the Jackson Hole Summit. He also reiterated that inflation continues to be a cause for concern, but the RBI's monetary policy stance is accommodative. Listen in.
Kelly, thanks. I'm here with Raghuram Rajan, who is the Governor of the Bank of India. Thanks for joining us.
Thank you for having me.
You have growth, you have inflation, you have a central bank discount rate that's not at zero. Do you feel alone in there?
Well, it's a nice set of problems to have, I think, in this world, to have a little bit of the traditional problems of some inflation, but a fair amount of growth.
So you have nobody to talk to because you have 6% inflation and you're still trying to get it down.
Well, I have to look to history. I look to how these economies were maybe 10, 15 years ago, learn from that.
Let's talk about some of the recent news. Among the things, you are right, neighbors with China, a huge trading partner with China. How has the Chinese devaluation affected you?
Well, we are big trading partners with China, but typically they export to us, we export relatively little to them. So if in fact there is a greater Chinese slowdown than is anticipated, it won't affect us as much as other countries around the world. Of course, everybody would like stronger Chinese growth, but to some extent we're amongst the least affected.
Do you feel like they're doing the right thing right now to get their economy going and taking the right measures?
Well, I think the longer-term transition they're looking at to move towards a more consumption-oriented economy is absolutely the right thing. They have to do it. And of course, the transition path can be a little fraught with uncertainty, and that's what we're seeing.
Not only are you alone inside there, but also back in India, you have some criticism. You're running with a 7.25% discount rate. And people say, hey, it's time to cut, given where everybody else is around the world. How do you defend that kind of interest rate when there's other people around the world with zero?
Well, we also have inflation, which other people don't have. So we have to look at the difference and make a judgment. We've cut interest rates 3 times this year, and we're still in accommodative mode. We'll look at the data as it comes in and take a further view. So we've not said we've finished. We said we're looking at the data and we'll take a view as the data allows us.
Kelly?
Mr. Governor, you told a meeting of central bankers, including Alan Greenspan, that there were fault lines hidden within the financial system globally. And in short order, you were proved right by the financial crisis. How do you see things today?
Well, I think the central problem today is really slow growth. And if we could find the magic bullet to make growth stronger, I think you would see a lot of the difficulties around the world vanish, whether it's the difficulties the emerging markets have, partly a result of not being able to export to stronger industrial country growth, or the difficulties that some industrial countries have with their high debt. So what we really all need is stronger growth, and we're all sort of trying to figure out where the secret sauce lies to restore the pre-financial crisis growth.
You're not arguing to United States Federal Reserve officials not to raise rates. You don't have a strong opinion in that regard?
Well, I think my position over time has been don't do it when the world is in turmoil. Because it's a long anticipated event. It has to happen sometime. Everybody knows it has to happen. But pick your time. And I think if the volatility we've seen calms down, as it seems to be, it could happen sooner rather than later. I don't think people would have a problem with that. It has to happen at some point.
All right, that's Governor Rajan's prescription, not just for India, but for the world economy at large. But moving on, the Reserve Bank of India has named ICICI Bank and State Bank of India as domestic systemically important banks, or DSIBs, which means that these banks have been identified as too big to fail. Accordingly, SBI will have to raise additional common equity Tier 1 capital at 0.8% of risk-weighted assets, and ICICI Bank will have to raise additional Tier 1 capital at 0.2% of risk-weighted assets. These banks have been identified as critical for uninterrupted availability of essential banking services to the country, even in the midst of a crisis. In response to their classification as DSIBs, both banks said that the announcement was on expected lines and that they will hold capital well in excess of current regulatory requirements.
All right, let's move on now. The last few months have not been easy for the government, with many of its much talked about reforms being stuck in Parliament. So while the government has now had to step back and allow the land ordinance to lapse, there are a string of other reforms which are still pending, and that's exactly what I asked the Finance Minister on Saturday at the Diamond Jubilee celebration of the Faculty of Management Studies of the Delhi University. Jaitley said the government is not on the back foot and continues to have the appetite to push through difficult reforms. Listen in.
I believe that there is a little bit of a reality check now in terms of the kind of reforms that are politically acceptable, the kind of reforms that you will be able to push through. I contextualize my question in light of what has happened as far as the land bill is concerned, for instance. You repromulgated the ordinance 3 times around. You've now decided to let the ordinance lapse. You've brought in a statutory order which has caused a little bit of confusion. I may ask you to elaborate on the necessity for the statutory order as well. Even other things, for instance, the need for airport privatization. There has been a pushback as far as airport privatization is concerned. Port corporatization, there has been a pushback as far as the agenda of port corporatization is concerned. In that context, may I ask you if it is getting increasingly difficult for you to take bold, decisive, politically acceptable or politically not acceptable reforms? Is there a reality check that's set in?
I think if you read the 2013 land law, probably the worst drafted legislation in Indian legislative history. I have been able to shortlist 45 drafting errors in it. Now the government is very clear. We called all the chief ministers in the Niti Aayog. The Prime Minister himself sat with them. Land is a concurrent list subject. All the chief ministers unanimously said there are some changes which are required. Either you do it, but if you are victims of a parliamentary stalemate, then allow us to do it in the states. Because it's a concurrent list subject, we will make the amendment. We only need central government permission. In fact, Tamil Nadu has already amended it and sought the central government permission. Some other states may follow. So the idea is not how well you are involved in a parliamentary stalemate, particularly if you have a cussed opponent who says, I must stop India's progress. If not, if I don't have the popular mandate, if I don't have the numbers in parliament, I at least can shout down and have the house adjourn. Therefore, the alternate route is also available because India is federal politics. Now, you mentioned airports. Now, you've had a few major airports in the country on different models. Cochin was a different model, Bangalore and Hyderabad are different models, Delhi and Mumbai are different models, which have developed to global standards. Now, with the kind of money the airport authority had, it started developing the other airports. So, if you've seen Calcutta recently, if you've seen smaller states, the airports have started developing. Now, nobody has decided that the management, operation and management can't be given to a private party. It can be. But you'll have to select which are the airports which you are willing to give it to a private party.
They were already selected, sir. 6 of them were already selected, and we haven't seen any forward movement on that.
Some of them, in a number of them, the Ministry of Civil Aviation is going ahead with the policy of O&M. So instead of development O&M, it is O&M because, and that is for Sunil Munjal and others on the dais to look at, the ones which have been developed by the airport authority cost a minuscule percentage compared to the ones which have been developed by private parties. Now, you wanted to know about the port
corporatization plan.
I think port is a very strange sector. You have a traditional law which talks of major ports and minor ports. Major ports are run by the central government, minor ports are run by the state governments or authorized by the state governments. Now, the major ports are no longer very major. And most of the minor ports, Gujarat itself is an example of a number of so-called minor ports which have become much bigger than the so-called major ports. Now, with regard to all these ports, you must always have a flexible model. because ultimately reforms are what is possible to do.
All right, that was the finance minister in conversation with Shireen earlier. Now, speaking of reforms, the finance ministry officials today met executives from ratings agency S&P. They made their case for a ratings upgrade. Ashmit Kumar was tracking that meeting and he's joining in with the details. Ashmit, take us through what each of the sides said, and is there any hope or any case for an upgrade for India?
Well, the government would certainly hope so. They imagine that they've put their best foot forward. Now, they did present, in fact, quite an optimistic picture before the S&P. They argued that, one, India is on course to achieving the 8% growth target for this fiscal. They also, in fact, argued that the macros are in place, that the twin deficits have been raised in, that the fiscal math is currently in place. They hope to reap dividends from that. They've also argued that inflation is currently under control, which in turn allows for greater room for monetary easing, essentially making a case that India is placed in an exceptional position, especially with respect to its global peers. S&P on its part, they sought to question the government's narrative. One, they've raised concerns with respect to the global concerns, more recently especially with respect to China. They've sought government's responses on questions such as the likely impact on the government's response with respect to global jitters. They've also red flagged issues such as falling exports, such as rising external debt. But the buzzword, the key takeaway here was reforms. Now, just like Modi's in a recent report had pointed out that upgrades, if any, will hinge to a large extent on reforms. That's essentially the message that S&P sought to drive home. The government on its part, especially in context of GST and land, clarified their positions, conceding that there is a political logjam, that it is hurting, but they're confident of overcoming these hurdles and ensuring that the reforms drive is persistent in nature. Of course, the current investment grade, India is pegged at BBB, which is one of the lowest investment grades. So clearly the government looking to put its best step forward and hoping to change that scenario a bit.
Well, let's see if the S&P goes back convinced. Ashmit, appreciate you joining us. But on to the action on the Wall Street, where volatility seems to be the only constant. The Nifty tumbling in late trade, slipping below 8,000. Sensex lost about 100 points. A choppy range-bound session. Mid-caps also down in tandem with the blue chips, and the mid-cap index lost about 0.5% or so. And there's been a lot of talk about India's fundamentals being strong, but the recently ended earnings season has cast a shadow of doubt over this optimism. So many brokerages have cut their year-end index targets. CNBC TV 18's Nimesh Shah and Surbi bring you the details.
China's devaluation of the yuan and uncertainty over the US Federal Reserve's rate hike. These two global factors have been keeping Indian investors on the edge over the last few days. Now, many experts have said that India is the most attractive market in the emerging market basket. But here's another reason for investors to worry, one that is much closer to home: a weak second quarter earnings season. Feeling that corporate earnings may not bounce back in the second half of the financial year, many brokerages have cut their year-end and 12-month index targets. Ambit Capital, for instance, has now cut its Sensex target thrice in the last few months. Its latest revision puts the year-end Sensex target at 28,000 instead of the earlier 32,000.
As a result in us taking a very circumspect view on the domestic investment cycle, domestic capex cycle. We're cutting our GDP growth there from 7% for the year-end to 6.8%, largely driven by our very despondent view on the domestic investment cycle, capex cycle, and that in turn translates into a more moderated view on the Sensex, where we are cutting from 32,000 at the year end to 28,000, whilst highlighting that there's a reasonably high chance, high possibility of the Sensex going all the way down to 22,000.
Ambit is not alone. A note from Barclays questions the recovery in earnings and cuts the 12-month Nifty target by over 5% to 9,642 from 10,219 earlier. As the note explains, Indian earnings have now remained stuck in single-digit territory for the past 3 years. This year is following a similar pattern, with downgrades to FY16 estimates persisting. End quote. Even Adrian Moat of JP Morgan, who's known for being bullish on India, is now advising trimming exposure to the country. In his note to clients this morning, he said, "We increase weight in Korea and Taiwan, funded by reducing weight mainly in India, China, Brazil and South Africa. We reallocate portfolio weight from financials, industrials and staples into technology within emerging markets." But not everyone is giving up on the India story just yet.
Long-term earnings can probably grow at 12 to 15%. Even in a bull market, like when you saw 2004, 2006, we had a correction. Even in those years, the average correction was 20%, right, from the top. So I think that people have to keep that in perspective, that you could have a correction which could be deeper than what you've seen. I'm not saying it will or it will not happen, but I'm saying in the past, a 20% correction has been par for the course.
Of course, not many are disputing the belief that India is in for quite a bout of volatility, especially in the short term. Nor is there much doubt that India may be in for a further correction before some stability returns. In Mumbai with Nimesh Shah, Surabhi Upadhyay.
Brokerages tempering expectation there, so you've got a Q1 GDP number to contend with when the markets open tomorrow, core sector data and plenty more. We'll be right back with you, the action live on CNBC TV 18.